Hey, there we are. Hey, everybody. Welcome to our Monday live stream. It is Monday, April the 12th, 2021. And over here on the other side of the room, I got Mike Wade coming in with me.
Hey, guys.
Mike's look into that camera there, right there, buddy. We got like all kinds of stuff happening in here. But anyway, guys, Mike's going to come in and he's actually going to talk a little bit later in the session. We're going to be discussing earnings and some upcoming earnings patterns that we see happening in the market. So very excited to have Mike in here with us. You guys know what we do here on this live stream session. Well, let me tell you first what we don't do. All right, I'm not going to sit here with you for 4 hours or 8 hours a day just doing what a lot of other folks do, which is just follow the markets and say, oh, look, that's going up. Oh, look, that's going down. That's not what we do here. I give you guys credit to be able to do that by just simply watching news, watching TV, or watching your own platform. You don't need me to illustrate it for you. The other thing we don't do is, as traders, we don't trade on hype. We don't trade on fear. We don't trade on greed. We are pattern traders. So what we look for are distinct patterns to enable us to trade the marketplace. All right. And then finally, and most of the time, but not all the time, most of the time we look at options as a surrogate for trading the stocks, especially if we like something for whatever pattern it might be hitting to let us trade to the upside. Then we'll look at call options or call spreads or some sort of bullish option opportunity in place of buying and holding the stock. So I want to let you know that right off the bat. Before we begin, I need to throw a little bit of housekeeping out there because that's what we have to do here, guys. Disclaimer you see on the screen in front of you. You can now you'll get the video. We're going to actually put this up. This will be recorded, and you'll have this shortly after the live stream is over. You can just stop tape right here if you want to read this whole thing word for word. I'm going to mention two quick things on behalf of myself and my co-host Mike Wade today. Number one. Stock and options trading has large potential rewards, but also large potential risk. And number two, we are not investment advisors, all right? We don't give specific financial advice. We are educators showing you how it is that we spot opportunities and create alternative risk trades. All right, that being said, let's move on, and let me tell you what we got planned today. So I want to look at market news. I want to show you what's popping up on the Bloomberg terminal and what we see as the most important news as of right now. I want to also talk a little bit about the charts, and we're going to look at IV charts this week. All right, so sometimes we come in here, we look at channel charts, and sometimes on our live streams we'll do fib charts. Today I thought what we'd do is we look at IV charts on all things stock. I'm going to get into cryptocurrency. We're going to take another look at Bitcoin. We're going to take another look at Ethereum. We're going to get some ideas of what's happening, but things in my mind, looking at the patterns that we see, look really good. I mean, we came very close last night to hitting new all-time highs and backed off a little bit. But right now, cryptocurrencies are very tight. It's very tightly wound up right now, ready to explode. So we'll look at that. And then also I want to take a look at Q1 earnings. Now, I'm going to look at Q1 earnings differently than anyone else you're going to be listening to. Everyone else you'll listen to will talk about the fundamentals of Q1 earnings, maybe give you an earnings whisper or two. But we want to look at the data. We want to look at the raw data behind some of the patterns that historically have done very well. And we'll talk about those too. So that's the plan going forward, guys. So let's go ahead and start. And I'm going to switch gears here. And we're going to pop on over. So one of the biggest news announcements that popped up today is it was reflecting on Coinbase's IPO. All right, so you can see here, and all I did was I took the information that I got off the Bloomberg terminal, and I started Googling the news so that you can see it the same way that I see it. We're looking at it together. All right, I don't know who has a Bloomberg terminal in here. Not many people that I know. But everybody has access to Google. So if you were to go in and Google Coinbase IPO, this is what you'd get right now, as you'd see the IPO is next week. Here's everything you need to know. And then will Coinbase go public? How much is Coinbase? What day does Coinbase go public? And it's just a matter of going ahead and popping these arrows up. Coinbase had great earnings. Now, they did something a little different than most IPOs. They're doing a direct IPO. What means that they're not going from underwriter to the exchange. They're going direct to exchange. Also, they released their earnings just prior to the IPO, which means they must have known that $1.8 billion in revenue was going to help spike that IPO quite a bit. And so how much is the Coinbase IPO? They're saying that the Coinbase shares trading between $350 to $375. That's based on a recent private NASDAQ auction. And then from there, the pre-IPO value looks like it's going to be around the range of $100 billion. But this one could continue to go higher as more and more interest goes into cryptocurrency, right? So I'll get into this and what it relates to with Bitcoin and Ether, but this is definitely going to help over the next week. It's going to help support those prices, right? The other thing we can look at is what day is Coinbase going to go public? So it looks like it's going to happen on Wednesday, April 14th, just a couple of days from now, right? So we'll see what happens with that as we move forward. I will be talking about this on our podcast, all right, toward the end of the week, because I will not be with you here on YouTube on Wednesday. But we will discuss it at the week's end, and we'll take a look and see what's going on and what kind of opportunities there are off the Coinbase IPO. So the other thing I just want to show you is you've got everyone out there from Yahoo Finance to Entrepreneur to Fool.com and many more giving their ideas on what is going to happen with Coinbase. Now, I can't give you ideas, all right? I can't give you ideas on something that woulda, coulda, shoulda happened. So as we can talk about Coinbase, what I have to do is I have to go and find something like a Riot blockchain or something like a MicroStrategy or PayPal or Tesla or Bitcoin or Ethereum, and I have to use that data that's out there, that long-term data, so that I can try to spot patterns in the market. By the way, we had a pattern last week on Bitcoin, right? We had a bullish pattern that happened last week on Bitcoin. I'm going to show that to you and show you where it is, and we're not that far away from where it is. So it's a very interesting pattern that's coming up, and it's showing right now when you look at the extensions, we're seeing something like 70,000. High 60s to low 70s as the next target, the shorter term target for Bitcoin. I'll get to it, all right? But for right now, let's get into the rest of the news. So I'm going to move out of cryptocurrency news and let's get into what else is happening. So GameStop is back in the markets again. I hate to keep talking about this, all right? I have not talked about this as a buy because when everybody started talking about this as a buy, GameStop was a lot higher than it is right now. Well, you can see right now the news as of just a couple of hours ago. GameStop stock falls towards its sixth straight decline. Analysts are downgrading it. As you know, they had an earnings report. Wasn't that exciting, right? And I don't see this. You got to look at this. Even if you look at it fundamentally, you got to look at this as a company that is. I mean, everybody's in the game sector now. Amazon, all right. Look at all the companies out there that are pushing games. To me, GameStop is the blockbuster of what's happening in gaming. And so we all know what happened to Blockbuster. There's only one left. And I'm actually putting that on my bucket list to go out and see. It's out in Bend, Oregon, if anybody's interested in knowing where the last and final Blockbuster is. Did you know that, Mike?
No, I did not.
The last Blockbuster is in Bend,
There's
Oregon.
Still one?
Yeah, there's one. It's like a museum. People flock to Bend, Oregon to see Blockbuster, to get selfies in front of the last and final Blockbuster. Now, GameStop may run down that road too, but there you go. So, you look at GameStop, you can see what's going on there. The Reddit, skeptics are warning that Reddit rally's going to fade. We'll take a look at that in a moment too. And I'll back up because I got some really, really cool news to share with you in a second. But, let's go to our charts real quick. And before I get into the charts, I think are going to be the ones that are most important to us. Take a look at Riot for a moment. RIOT. All right. So where's Riot Blockchain after all the Coinbase information came out? Well, it's still consolidating. As you can see, you take a look at this triangle pattern that's happening on Riot Blockchain, and you can see here, and let me bring up the big mouse. Here's the big mouse. So, from end to end, we're talking about 17 and a half, which actually happened in late January, to really the middle of February, 80. And then we've dropped down to a low of 35 and a high of, let's call it 67, down to 40, high of 55. Do you see what's happening? The lows are getting higher, but the highs are getting lower. So right now, it's anybody's guess, technically, as to where this goes. Where does it really start to slump? Because they call this a 6-day slump. As a trader, I don't see this as a 6-day slump. I see this as consolidation. We break below 40, or we break above 58, and then we got ourselves a pattern. And that's what we're looking for right now in GameStop. Now, let's move to Coinbase. I'm sorry, GameStop. I don't know why I'm calling it GameStop. Riot Blockchain. So, again, what has to happen for Riot to drop? What has to happen for Riot to drop is Bitcoin's got to drop. But Bitcoin's being held up pretty well. So if Bitcoin breaks above the 62,000 mark, because 61, I think it's 61.7, somewhere around 61, depending on what you look at on the chart, 61.7 is the high. We get above 62, and now we're going to see that market start to accelerate a stock like Riot. Could possibly move again, and we're looking at the first area of resistance, which is 57 to 58. I don't think we'll see, in order to see 80, again on Riot, we got to start seeing a runaway market once again with Bitcoin and cryptocurrency as a whole. All right, now back to the other news story. GameStop. Sorry, I got them confused. That's what happens sometimes when you're at 55. Mike's back there laughing, but he knows exactly what I'm talking about.
I'm older than that, yeah.
So yeah. So GameStop slumping. Let's look at the chart of GameStop. So back to the charts again. GME. Kind of doing things backwards for those of you that are just joining us. All right, so here we go. And GameStop kind of doing the same situation here, although its low is down here just below 50. So we had a high near 500, down to 50, up to 350, down to about 125, and then up to about 225, and where are we at right now? 158. Again, very much like Riot Blockchain, we're in a triangle formation. We've got to break either above the most recent area of resistance to see some moves higher, or we got to go down below that area of support. So I don't, on the probability side, I don't agree with the YouTube sensations that are out there saying that AMC to the moon, GMC to the moon, because there is too much money that's going to flow in on the other side. What's happened in the last couple months? All that leverage that everyone saw and it was talking about when we saw GameStop go from $25 a share up to near 500, all that 5 and 7 to 1 leverage and even higher, that's all gone. The leverage, the short interest has dropped considerably, meaning that two things can happen. Well, three things can happen. People can buy the stock, but there are holders of the stock that are going to bail out of it. Whether they're going to bail out at a profit or a loss, well, that's up to them to determine. And then you've got new shorts that are going to enter the market. So you really have this 2 against 1 that can be happening with GameStop. All right, one buyer, potentially two sellers. The seller who already owns and the seller who's expecting it to go down. And then there's the option traders, the call buyers, the put buyers. All right, the put sellers. There are not as many call sellers out there because that really puts you in a disadvantage to leverage. But there could be a lot of call spreaders out there who are creating bearish call spreads, looking to profit from that move to the downside, but do it in a high probability fashion. Okay. Now, from here, let's move into the overall markets. I'm seeing some of you guys popping on the chat box there. So I want to say hi to everybody who's joined us right now. And, keep in mind that that you're out here. You can chat to me. Hit me up on the chat box. Love to know who you are, where you're from, and anybody that has any stock, questions on where you want to see what's happening in the stock market. Your favorite stock, give it to me. Maybe we'll be able to get to it here within the hour. But again, love to know who's out there and what's happening in your side of the world. I see that Bobby's coming in from Northeast Georgia. Northeast Georgia, would that actually be Gwinnett County? Northeast Georgia? That's my guess. All right, and I'm talking about in the Atlanta area, not Northeast Georgia like Augusta National. But anyway, glad to have you on there, Bobby. And Funny Monkey saying that the market's going to likely drop this week. It's been going up for 2 straight weeks. I'm with you on that. I took a position in the VIX last week, and we're going to talk about that on the podcast. And we'll talk about what's happening on the podcast as well and how that VXX position I have. But I am essentially long VXX until the end of this week. I did it not because I expect the markets to drop, but I did it as a hedge against some of the long positions I have in my portfolio. So again, we'll see where that ends up happening as we move along. All right, so now we're actually getting some movement out there. And, crypto's extremely hot now. But eventually it'll crash for what happened a few years ago. Yes, but keep in mind, what happened a few years ago were early adopters. You had the early adopters in 2013. You had the retail crowd jumping in 2017. And now we've got a lot of institution behind us. And I don't believe we've seen that bubble like we saw occur in 2017, where we went from around 1,000 Bitcoin all the way up to 20,000. In this case, we were in for that to happen again, I really think we'd need to see 10,000 Bitcoin become 200,000. Or let's call it 5,000 Bitcoin become 100,000. So we really need to get to a 6-figure number on Bitcoin before I believe we've bubbled up for the next move down. All right, so a lot of you guys kind of coming in, talking about, what you want to see in terms of stocks. I'll get back to you. And glad to hear some of you coming in. There's Philly in the house, Seattle, Sebring, Florida, South Central PA. Nice, David. Glad to have you in from South Central PA. Chappaqua, New York. I actually looked at a summer home in Chappaqua, New York, but I'm on the other side of the river, Hermaine. So that's where we vacation, upstate New York in the summers. Anyway, glad to see you guys all coming in. Michael's close to us. Tampa, Florida. We're broadcasting from Sarasota. But anyway, let's jump into some more market information. I'm actually going to go to the overall stock charts. Let's take a look at my list. So let's pop into my list. And my stock list, what I like to look at is I like to look at the overall market. So we'll start with SPY. Now I have a 120-day chart here of SPY. But what I want to do is I want to look at what's happening on the quarterly. And the quarterly means let's go back and look at 70 days. So 70 days should take us back to around the beginning of the year, and it most certainly does here, as you can see from December 29th to present. You can see what's going on with the overall stock market. This is SPY we're looking at right now. So SPY trending very nicely. The only part of a hiccup we got was back in March, in February, March, where we had that drop in the last part of February into the first part of March. But guess what? We saw that coming, folks, and I talked about it right here on the YouTube channel where we looked at something called the money calendar, and the money calendar showed us bearishness happening in that back half of February. And that's exactly what we got. And after that first week of March, it was showing a lot of bullishness. Now, we've been seeing bullishness in March, and we're seeing April as one of the best times to be bullish in the market. When you look at a month-by-month basis, January through December, April is one of those best months to be bullish. And we can see that since March 31st, we've had new highs. We're getting just accelerated moves in the stock market. And actually, that's been doing very well. All right, if I run the latest on here, which really does put us where we are right now, you can see that the markets, zooming in, really haven't done much today. It's kind of on a fizzle. But look at the move that happened on Friday. I mean, that acceleration that happened in the Friday afternoon really took us to a new place that we haven't been before. So that's the S&P. What I want to do here is I want to put implied volatility on here. Now, implied volatility is a tool that we use as option traders to tell whether or not options, call and put options, are cheap or expensive. I'm going to tell you, they've been as cheap as they've been in the last year with things like the overall stock market. So under chart overlay, I'm going to put in the short-term at-the-money IV. Let's update this. Now check that out. Now what we're looking at is we've got on candlesticks, we've got acceleration to the upside, but look at this red line here. This red line, we popped up. That was when the market dropped a bit, when we went from 385 down to 370 in a couple of days back in January. We had another pop that happened in the back half of February, but look what happened after that. Option volume, option premiums have dropped as the market's gone higher. Now, this is really interesting right here. I want to share with you right here what's going on. In just the last day or two, we now have seen the implied volatility pop. What I mean by that is we've gone from below 12 to above 13. So we've seen about a 10% pop in IV. Every time we've seen this pop in IV, it precedes a pullback in the stock market. So when some of you out there are saying, is it time for the market to pull back? This might be a little bit of a pullback that could be happening this week. It's very possible that could happen. All right, so that's the S&P. Right now, all things, if you look at technicals, up. We're going into earnings. And the first part of earnings, typically the first week to 2 weeks of earnings, happen to be where the stocks that have stronger earnings come out. And it's not because that's the way that the stock market, the exchange, asks that these earnings be delineated. Let's get the strong stuff out of the way first, and then we get the weak stuff at the end. No, that's just the way it is right now. Technology comes out first. We see financials coming out first, and then it slowly moves into the retail establishment that comes out in the first part of the following month, which in this case is going to be May. We'll start seeing retail stocks pushing earnings in May, and yes, there'll be a couple of good ones in there because there always are, but we typically see strength in the first half of an earnings cycle and weakness in the second half. That could also lead to the stock market moving higher. So, we got earnings season coming up. We got technicals showing strong. We got seasonality itself saying that the markets are strong. The VIX has given us maybe a little early warning sign, but that's a great hedge opportunity right there. Let's move in and let's just see what else is going on. So, if I look at TLT, I got TLT out here, and TLT has been in a downtrend. This is the bond market. Bond markets have been trending down, right? Well, what goes up when bonds go down? Yields. And if the bond market rolls over and goes below the lows that happened in March, I would start to get a little bit nervous about the stock market, because now the stock market, there's a lot of folks out there that say the stock market has priced in inflation. The stock market has priced in interest rates. I don't think it has. I think it priced in potentially a small bump to the downside. But then the Fed came out just recently and said, oh, this is just a short-term thing happening. Now, when that happened, if you take a look at my blue mouse here, you'll see where the bond market rallied off that news. But then we dropped down. We're starting to consolidate a little. Now, this looks like almost a bullish pennant. And if the bond market were to rise slowly, I think that's great for stocks. But if we see the bond market start to rise rapidly, it tells me that traders are getting into bonds. Well, what are they selling to get into bonds? Stocks, commodities, riskier assets. Take a look at implied volatility. Now, implied volatility went up as the bond market was dropping rather quickly, but then it fell down as the bond market slowed its rate, its move, and started descending again. So we're really, look at the red line. We're really kind of in the middle, so it doesn't give us a trend right now as to where option premiums are going. And as an option trader, if I can't get a read on option premiums, it's a little harder to get a read on what the underlying is doing. So this is not helping or hurting the stock market at all. The U.S. dollar. So the U.S. dollar this year has been really on a tear. And if you were talking to me last week, we were at just coming off of new highs for the year. As the dollar, this is UUP you're looking at here, and you see UUP was trading down here around 24.10, and it got as high as 25.10 before pulling back a little bit. But we're still on the high side. Implied volatility really isn't doing much of anything, and as an option trader, I tend to ignore the IV on UUP. I just ignore it. Moving into commodities, let's take a look at crude oil here. So crude oil itself, and we were discussing this last week, and I mentioned even on the podcast too, that I'm beginning to like the crude oil market a little bit here. And you know, we've seen that move where we started the year out around 33 with USO, moved as high as above 44, had a pullback. Now we're starting to really try to inch a little bit forward. But in order for crude to move higher, we've got to see the economy continue to jumpstart. We got to see demand kicking in. And, you know, I think, you know, the spring break was off to a pretty good start. Now we're starting to hear COVID numbers are rising again in the variant. The B117 variant is causing some rises, and that happened in spring break. You guys know, if you watch my podcast, you know that I'm a contrarian. And I said early on, don't give these shots to old people. They never go out. They don't leave their houses. You know, they have the money. They got people bringing the food to them, and they don't care to go out. I said, give the shots to the young people. They're going out anyway. They're sneaking out of their houses. They're in clubs. They're not wearing masks. Give the shot to the young people. That way they don't bring it home to their parents and their grandparents. That's what I was saying. We would be done with this now. Spring break would, you know, forget July 4th reopening. We could have reopened spring break if we would have done that. That's just my opinion, if we would have done it that way. Anyway, I digress. So, you know, you take a look at something like USO. As the demand kicks in, we're going to see, you know, stocks. We're going to see energy stocks. We're going to see stocks like USO, these ETFs, and even an ETF like XLE, which I am long. I have a long position in XLE, expecting this trend to resume itself. So that's what I see happening with USO. Right? Moving to GLD, this is the one that's kind of the kicker. All right? I have different opinions about gold and about GLD. Here's my trader opinion about gold. I don't like it. I think gold might retest the 150s and actually may go down to the 150 area. As an investor, as a long-term investor of GLD, I absolutely love it because I'm going to buy down long-term on GLD if we hit 150. And so, and the reason why is because I do think eventually all of this is going to get overdone, and it's all going to go overdone in the stock market, and it might not be even this year, but the stock market, crypto, commodities, and I'm looking for value, and I think value might be in GLD and gold areas. All right. So, all right. So let's go ahead and let's take a quick look at FANG while we're at it. So let's start with Facebook. And as you can see, and again, I'm looking at stocks today. If you're just joining me, guys, I'm looking at stocks today based on their implied volatility. So implied volatility is a reading of options value and what an option trader can do in terms of whether they want to be buying options if it's cheap or selling options if it's expensive. And so you're going to find that the majority of what we're looking at today, options are on the cheap side. Okay? Hey, if you haven't done so yet and you're coming on in and you're checking out what you see here on our live session, guys, help me and the channel out. If you can do me a quick favor, down below our live stream right now, you'll see a like button. All right? If you like what we're doing today, hit that like button. It really does support the channel. Also, I'm going to let you know this too. In our description, in the live section, I'm working with my tools at tomsoptiontools.com, and we're going to take a little deeper dive today in these. But there's a link down there for a 2-week free trial, all right, on our option trader, our contrarian trader, or our complete trader. So if you've never seen our tools before, check them out. We like to say that we have the sleeper of software. You know what a sleeper car is? A sleeper car, if you're pulling up next to somebody, you're looking at the car and you're like, what can that thing do? And then the light turns green and the sleeper car is gone. It moves that fast. That's what our tools have, All right, our tools are genuinely, we call them the sleeper card tools of software. Let me show you something else if you haven't seen this yet. This was the most recent, this is the bonus edition of Stocks and Commodities magazine. All right, now I'm thumbing through this because I want to get to the end, because right past the end here. Check this out. Option trading systems. All right, so you know what's up there at number 1? TradeStation. You know who's a finalist? Tastyworks. All right, semi-finalist, eSignal. You know what all 3 of those are? Brokerages. You know who's below that? Optionetics and Tom's Trading Room and Tom's Option Tools. So I am excited to be the David in all of the Goliaths when it comes to options trading systems. Now, one more thing I want to talk about: trading centers, schools, and training. That's on the next page. That's on page 37. All right, so here you go. The big ones in there. TradeStation. All right, and then you move on into the Chicago Board Options Exchange. All right. Guess who comes in under the 3rd area, under honorable mentions, below all the big behemoths? Optionetics and Tom's Trading Room. So you know what? Those of you who, and this is a people's choice thing, all right? You have to vote on this. So for those of you who put us in the vote, thank you very much. I appreciate that. I really do. Because for our little group to be up there with all these big boys, I am absolutely flattered by that. All right. So anyway, let's go ahead and move on. So we're looking at Facebook, and you can see the red line that you see there is options applied volatility. Yes, the stock is coming off of new highs for the year. But guess what happened to the options? The options were trading up here in the 60s and have moved down into the 30s. So it's safe to say that the time premium in the stock of Facebook, the option time premium, is trading at half the levels it was just a few months ago. All right, moving into Apple. Now, Apple is not trading at highs for the year. In fact, Apple is off the lows of 120. We talked about it's time to go apple picking. All right, we did a video not too long ago saying is it time to go apple picking. We were talking about 115, 120 as a great area of support, and that's what's happened. Well, we've lifted off of that in the last couple weeks, and now Apple's trading above 130. But take a look at the options premium. You know, when it was at 120, option premium was down here below 30. Now that it's trading higher, option premium started to lift off because, again, more and more people are starting to see Apple moving higher. It's causing a buzz. And so for that's why we're seeing a little uptick in premium. But still, options premium on Apple looks pretty good. You know, if you like it to the upside, call buying may be the way to go. If you think it's going to turn around and go back down, put buying may be the way to go. But I can tell you right now, selling options premium in Apple doesn't look like the way to go right now because it's not that expensive. Moving into Amazon. All right, so let's talk about Amazon. Amazon too, down here around 3,000 and 2,900 were great areas of support. We talked about the support in Amazon at 3,000. Amazon just came off of new highs earlier today near 3,400. Now, if you take a look and see, Amazon is very close to hitting those all-time high numbers again. After backing off and staying, just in the last couple weeks, we were down here in this 3,000 area. And we hit it 2 weeks ago. Now we're trading about 12 to 13% higher. Where do we go from here? I think Amazon's going to continue to lift off because they're gunning for the shorts that are up there at around the 3,450, 3,500 area. So I think I see Amazon as a tradable stock up into the 35, 36 area. I don't know how long that's going to hang out for, but the options premium out there is cheap. It's still expensive in terms of the actual amounts you have to pay for an option, but it's cheaper than it has been. So when I look at this, I'm looking at maybe out of the money bull call spreads, buying a lower strike call, selling a higher strike call away from where the stock is right now, putting myself up there around a potential target. Let's move into Netflix. Netflix, too, has moved higher. We're seeing now social media stocks kind of coming back into vogue and have been for the last couple weeks. Now, what's interesting about Netflix, and we're going to cover Netflix a little bit deeper here in a few minutes, but what's interesting about Netflix is that Netflix, look at the options applied volatility. It's moving higher. It been on lows back in February, back in March, but it's been lifting off really since April 1st. So about a week ago, we started getting some liftoff. There's a reason for that. I will cover it shortly. Moving on. Take a look at Google. Now, Google is just starting to, actually, in the last week, Google hit new all-time highs, and it's extended on those highs, 2250. But take a look at the implied volatility. When it jumped above 2100, the IV was still trading down here around 24. It's at 28 today, a little bit higher, right? Is Google cresting? Google does look like it could be cresting here, right? And again, we can check that out as well. Master Chef saying, "How can I donate to you?" You know, I haven't put the super chat up, guys. I really didn't think about doing that, but I will tell you something about the monetizing that we do here in our room. All of the top line revenues that come into YouTube, we donate to charity. All right, so we look at those monthly revenues, and we take those monthly revenues, and we donate them to some kind of a charity. And you can look at all the charity donations that we've done. If you simply go to my site, tomgentile.com, you can see a giving page where we show giving back, and we've got all the charities out there. And we donate. That money goes directly to charity in forms of either direct donations or charity auctions. Different ways that we donate to charity. But yeah, I mean, I don't need the money, all right. And so we donate that. We give that out to where we think it's going to be used the best. So you're helping by watching these videos. You're helping support causes. Not mine. All right, let's continue on. So we talked about FANG. We've gotten to the G, and I'm going to get to the very last one, and that is Tesla. And if you take a look at what's going on with Tesla, so Tesla had highs at 900 back there in January, and this popped all the way down to 550, and then up again to 700, down to 600, and now we're back up to that 700 area. This is looking very interesting because if Bitcoin, all of this is a lot of this is with Tesla is kind of hedged on Bitcoin. So if Bitcoin jumps above 700, if Bitcoin jumps above 61,000, then I see stocks like Tesla getting a boost from that. And Tesla does have earnings coming out in 14 days. So I would rather be on this 2 week side of what's going on with Tesla. I would not want to run through earnings on that. And that's simply because, well, look what happened the last time earnings came out. We went from 900 and we dropped within a couple of days. We dropped down to 800 real fast and then floated all the way down to 550. So if we were going to look at an earnings pattern, and not even an earnings pattern, we're going to watch Bitcoin. We're going to watch Bitcoin over the next 2 weeks. And if Bitcoin breaks the breakout, then Tesla should move along with it in some form or fashion. All right. So let's dive into cryptocurrencies because that's what a lot of you are here to talk about. And I can see some, a lot of you that are popping in. Again, if you're just joining us, guys, we just went through a whole session on the stock market, SPY, TLT, UUP, USO, GLD, all the FANG stocks, and we did it looking at what an option trader looks at using implied volatility to try to get a gauge on where things are going. Okay. From there, we want to move into Bitcoin, cryptocurrency. So I'm going to look at Bitcoin and Ethereum. I'm going to stay out of the small coins this week, all right, because I got something I think is more important to show you. So moving into the small coins, or the big coins, not the small coins. Pop over to cryptocurrency charts. This is Bitcoin. I want to share this with you right now. So what we have on here is that I just have a simple chart of Bitcoin, and beside it, I've got the 10 and the 30-day moving averages. All right, I think those will actually work very well with cryptocurrencies. But more importantly, we have our darknet strategy on here. And what darknet is, for those of you that don't know, very simple. What we can do is we can get in there and with crypto, we can take a look, just like we do in the stock market, looking at channels. Looking at those channels that are short-term, intermediate, long-term, and stacking them. What we do is something called channel stacking. And when we get support on short, intermediate, long-term, that's when we start getting bullish opportunities. It happened back in January. At the end of January, we got it in the 30s, rallied all the way up to above 50,000. Got it again in the 40s, rallied up to near 60,000. Got it again in the 50s, rallied up to just above 55, and got it again just last week around the $55,000 area. And look where we are now, 60,000 and high. But this is more interesting than that, is if you take a look at this wedge formation that's happening, where we're hitting same highs and higher lows at 45, higher lows at 50, higher lows at 55. So 45, 50, 55, where's the next area of support likely to be? Well, we've got to jump up into the mid-60s, and then 60,000 becomes the next area of support when you look at these $5,000 numbers moving higher. All right? Those are some great things that we can look at out there, guys, when it comes to looking at Bitcoin itself. Now, for those of you that are new to Bitcoin, all right, if you're new to Bitcoin, then what you need to concentrate on is, again, you don't need $55,000 or $60,000 to purchase a coin. These things are purchased in fractions. You can purchase a fraction of Bitcoin. So let me just throw it out there. If I wanted to put $500 into Bitcoin right now, and this is not a recommendation, but if I wanted to put $500 in Bitcoin right now, what would I get? How much Bitcoin would I get? Now let's go find out. So this is Coinbase Pro. And Coinbase Pro, I love Coinbase Pro because it has a really sleek look to it, right? But the other thing I like about Coinbase Pro is if I were to come in here to the order form section, I'm going to blow that up right now. Now, let's say I was going to do a limit order on Bitcoin, all right? So in this case, I'm sorry, let's just look at a market order. So if I were going to put in $500, 500 US dollars, what's that going to bring me in Bitcoin? Well, there it is right there. It delineates down to 0.00828821 BTC. Notice that Bitcoin goes 8 decimal places to the right. All right? Oh, yeah, you can't see it because my head's in the way. How about now? So, again, $500 USD actually comes out to 0.00828821 BTC. We know what 1 Bitcoin is equal to. It's equal to somewhere around $60,000 right now. But if you want to know what $500 will get you in Bitcoin, that's what it'll get you in Bitcoin right now. Okay? So that's what I wanted to share with you on how to, you don't need $60,000 to buy Bitcoin. Let's back up. Let's take a look at what's happening with Ethereum. So ETH, and I'm going to look at ETH a different way, right? Let's update ETH. Here's ETH. So ETH actually had a darknet signal back in January, and that signal came just around the $1,200 mark. And then the sell came just under the $1,800 mark, so a nice little move from 12 to 18. We haven't seen anything happening on this yet. But if you take a look at what's been going on, lower highs, and then we had that higher lows, same highs, bust out above those highs. And Ethereum in the last couple weeks has hit new all-time highs. This is what's been on. Mainstream media has been talking about it for a good bit. We've been talking about it for a while now. In fact, I was talking about it when Ethereum was actually trading below 1,000, and I said, take a look at Ethereum. This is the coin to watch. It's going to outperform Bitcoin. And here's my next prediction on Ethereum. Let's go to another website here real quick. I'm going to pop on over. I'm going to move out of. We'll get to earnings season in a moment. Let's go to Coinbase IPO. Let's change this. I want to go to coinmarketcap.com. Now I want you to take a look at these top two, Bitcoin and Ethereum. This is the market cap for each of them. Right now, you see, and this is the 24-hour move, Bitcoin's up 0.87%, Ethereum's only up 0.24%. That's in the last 7 days. All right, but if you go back and look at this over the last month, over the last few months, you'll see Ethereum has really accelerated much, much faster than Bitcoin. This is the important thing. Bitcoin, $1.124 trillion market cap. Ethereum, $246 billion market cap. Now, I believe sometime in the future, it might not be in the near future, but down the road, I believe Ethereum is going to be pushing and gunning for the market cap that we see right now with Bitcoin. Does that mean that Ethereum's price is going to go up by a factor of 4 to 4.5 compared to Bitcoin? Yes, that's exactly what I believe is going to happen. All right. Also, there's a lot of news out there about China's digital currency and how that could impact Bitcoin, Ethereum, etc. I don't see it impacting that much, and I'll tell you why. Because the Chinese right now can't trade Bitcoin. They can't trade Ethereum. They can't trade cryptocurrencies. All right? They're banned in China. So they're only going to be able to trade or work within their own crypto. So how does that hurt the cryptocurrency market? Because the cryptocurrency market is excluding China as one of its traders. I think all it does is it creates the opposite. It creates more of a demand for people that know how to use VPNs. It creates demand outside of their countries. How do you buy cryptocurrency outside of your country if it's banned? Use a virtual private network. That's what a lot of people already know. So that's out there. And so you look at that. I think what hurts Bitcoin is if Bitcoin's market cap exceeds the gross domestic product of the U.S., all right? And for that to happen, Bitcoin's got to be trading around 700,000 USD. Then we cause an issue where the U.S. comes in and says, hey, we got a problem on our hands, right? I see 100,000 to 200,000 to even 500,000 before that happens. My 10-year outlook on Bitcoin is 500,000, right? But this year I'm expecting 100,000 to hit before we hit the end of the year. We're already at 60 right now. So my thoughts, all right? So if you take a look at the rest of them, this is a real interesting one that's been happening. Take a look at XRP. Some of you have been talking about that in the chat. And I apologize for not getting to all of the chats on here. I don't know how anybody that does a live stream that that has hundreds, if not thousands, of viewers can get on and actually answer chats. And I know that's probably where Super Chat comes in. Maybe we'll add that into the future. But as of right now, I'm trying to look at them as they're coming by, and at the same time show you guys what we're doing here. Take a look at XRP. XRP was under an investigation, and it got delisted from Coinbase, and that thing dropped all the way down to, what was it, like 17 cents? Now it's $1.36. This thing has gone up sixfold since the lows we saw just a couple of months ago. And the unfortunate thing is the folks that have Coinbase can't trade it. But if you have Binance, if you have other means of trading XRP, you most certainly can. All right? And kudos to you that stepped up to the plate and did it. We actually had some interesting buying opportunities that came up on XRP, but we chose to ignore them because it was not tradable on the Coinbase exchange. Shame on us. Anyway, there's so many other ones I could go through here, but just talking about Bitcoin and Ethereum. Again, we have a bullish signal that happened on Bitcoin last week at around just above the 55,000 level, and Ethereum is just continuing to make new highs. So we'll see where those go in the coming days and weeks. So finally, let's bring Mike Wade into this conversation, and we're going to talk about earnings. So we're putting Mike and I are both putting a video together, and we're going to be talking about Netflix as an example. So I'm going to put Netflix up on the screen, and I want to show you a couple things. Let's look at first a chart of Netflix once again. So let's back up to Netflix, and here's Netflix, and there's the IV on Netflix. I'm going to get rid of the moving averages. I want to have just as clean of a chart as I can. So what's going on with Netflix? Well, they're announcing earnings in a little more than a week. They're a little more than a week away. I think it's 7 days away. And so what we've noticed with earnings on Netflix, if I were to go to a stock chart, let's go to a stock chart and just type in NFLX because I want to bring some stuff up on the screen that we can all see. There we go. So the earnings are coming out in 8 days. But more importantly, if I put a 100-day chart up there, that's going to show us some past. If you take a look here, okay, so let's go to 120 days. Let's just look at the last two earnings cycles. I'm going to blow this up on the screen so everybody can see it. But take a look over here. So earnings And Mike, what's that triangle tell us?
That's earnings. That's the earnings date. And the down triangle means the earnings were disappointing, less than expected.
Yeah, and look what happened. The stock disappointed too, as it went from $525 down into the fours, into high 4s. And then it rolled around, rolled over, went higher, higher. And you can see here, this was October earnings. So go out to the earnings that happened in January. Same situation, but different result.
Yeah, poor earnings and the stock gapped up.
Yeah, poor earnings. Stock was trading over here at 500. If you saw the earnings come in and you were betting to the downside on Netflix, you got hammered because the stock gapped against you in a big way as it went from the $500 area to like 590, just like that. It then fell. It ran up that same day or the day after earnings announcement. The earnings announcement came out, but then it fell afterwards. How many people that were short this could have hung on to have this come down and still end up losing money because it never made it back down to 500? That's if you're short the stock. Imagine if you bought puts on this. You're already paying. Now that's the red line here. The red line. If you're buying right before earnings, you're paying extremely high prices, only to see the theta just move away from you. Over here, you might have made some money. Buying those options at the 525 level, and then they open at 500, you might have made money, but chances are those options were trading at more than that price move, and they may have dropped. Even though the stock dropped, you might have seen a drop in the option price. I can tell you right away, looking at what happened on the most recent earnings, that if you were bearish this, not only did you lose money on the time premium, but you lost money on the price direction too as it moved against you. So here we are coming up amongst another earnings area. How about instead of going out there and buying a stock right before earnings and holding it through earnings, or buying calls right before earnings and holding through earnings and looking for that goose that never comes? What if we were to trade earnings more like a ticket scalper? Like 1 to 2 weeks before earnings, before everybody starts talking about it. 2 weeks before, start buying call options. And now you're holding tickets to the Super Bowl. And right before the event begins, that's the earnings. I got two. Got two on the 50-yard line. You know what's going to happen? People are going to pay up for those. And what happens is people pay up for those options because, yes, the stock price is kind of rising higher, but guess what? This line right here, it is easier to predict ahead of earnings than price. Price could go sideways, like for instance it did back in January, where price went sideways, but that option price went up in value. Now that all goes away after the earnings come out. Option price decays very quickly after because again, the unknown is now known, and the air is let out of the balloon in terms of implied volatility. So we got an earnings event that's happening in 8 days, and we're getting that tick up. Now, if you look at what's happened with price on Netflix, the 2 weeks leading into earnings, the 1 to 2 weeks, price ticks up 3 out of the last 4 earnings cycles. Implied volatility ticked up all 4 of the last 4 earnings cycles. So one way we could look at this, we go look at the options. Let's go look at the option chains on Netflix. And we'll look at the option chains that expire next week because that's the week that the earnings announcement's going to happen. And take a look here. Okay, so we're got calls on the left and puts on the right. Let's just look at the calls. So the calls, right now, the 550 calls are real close to at the money. Look at what those suckers are trading for. $22. All right? And what you have to realize, though, is that 22 could become 23, could become 24, could become 25, could become 30 by next week. Even if the stock stays still, people are going to be piling into these call options. They want tickets to the event. They want the ticket to earnings, and they're going to pay up for that ticket because they think Netflix is going to surprise to the upside. And guess what? There are just as many folks out there that think Disney Plus is going to hand Netflix an earnings disappointment. They're going to be buying puts, and the put options might increase in value too. But what we noticed is the last 3 of the last 4 earnings cycles, we've seen a slight uptick in Netflix in price. So looking at the 75% of the last year, Netflix rising in price into earnings, and 100% of the time over the last year, the volatility, the option premiums have risen then maybe looking at that call option makes sense. But Tom, $20 is just much too much to pay for these things. I mean, I think they are.
Yeah, that's a lot. That's a lot for an option.
We could go out and buy the at the money or the out of the monies because they're going to rise in price and in volatility a little bit.
Yeah, absolutely.
But the party's over when, Mike?
As soon as the announcement hits.
As soon as the announcement hits, the party's over, guys. And so, that's the way we like to look at trading these. We call them surges, where price and volatility surge into that event. There are a lot of different surge events, but many of them relate right around earnings season. And so, a couple ways that we can look at surges. I'm going to show you something called in our tools, in Tom's Option Tools. If you go to Tom's Option Tools, I'm going to actually take you from the beginning, after the login. When you log in, you got a couple different areas you can go to. This is where all of our options data is. This is that darknet I was talking about, and I was showing you darknet channels on cryptocurrencies. That's where you would go. Actually, go into a crypto area to get that. Then we got a complete trader, which includes the money counter. And we can go into the money counter and we can see, hey, what's going on with the month of April? Wow. It looks really bullish all the way out until toward the end of the month. Then it starts to turn a little orange. That means we're going to start seeing some bearishness coming in based on the last 10 years of what the most popular stocks are doing. All right. That's not where I want to go, though. Where I want to go is I want to go to an area up here at the top. All right, I want to go to stocks. I want to go to stock analysis. All right, stock analysis. And I want to come on over and go down to, we got dividends, gyrations, correlations, stock volume, or earnings effects. Earnings effects. What do earnings affect in both stock and how do earnings affect a stock's, not just the price, but its option implied volatility? So we can look and see what's going on with the earnings. And let's look at earnings and let's look at the S&P 500, for instance. So I'm going to look at the S&P 500 stocks. I want to see what price changes occur before earnings, the last 4 earnings events. And we're going to run that on the S&P 500. This might actually take a few seconds. You know what I'm going to do? I'm actually going to run it on the S&P 100. All right? Those of you that have our tools, you can run this on every optional stock known to man if you want. I'm just going to work this down to the S&P 100. And you can see that we just ran those 100 stocks. And look what pops up. These are all the big ones that actually have moved at least almost double digits in here. But you can see what happens between before earnings date and after earnings date. But this is price. So what happens is Simon Property Group has moved an average of 9.5% before earnings. Chevron, 7.47 before earnings. Booking Holdings, 7.34% before earnings. But you know what I like to look for? These over here are positive and negative numbers. If I can see 4 positives or 4 negatives in the group, then I like what I see. So, what I'm going to do is I'm going to go over here. I'm going to clear all this out. And I'm going to come over, and what I want to do is start check marking things. Now, I haven't done this ahead of time, guys. I didn't just make this pot like Julia Childs. I'm going to yank out a turkey that's already done. You're getting this live. I haven't done it yet. So let's go ahead and see what we got here. All right, J.P. Morgan Chase. I'm hitting that one.
Citigroup too, right above it.
We see that, yeah, and Citigroup right above it. Mm-hmm. And then what else do we see here? Here's Goldman Sachs. All right, so there's 3. Wow, they're all financials, Mike.
Capital One goes down consistently.
And Capital One Financial, -10, -6, -4, -6. But let's just stick with the positives. All right. So I got all these positives here. Let's just utilize these 3. All right. Oh, here's one more. Bank of America, another financial. What is going on? Wells Fargo, another financial. Qualcomm, there's a tech. Thank God we got a tech stock in the group. Moving along, and then it just kind of moves on down. But let's just take those. So I got 6 stocks. What I'm going to do is I'm going to put those in an area, and I'm going to call that. Let's see where I've got something I could use in here because I got so many of them out here that I've got as different stock. You know what? I'm just going to use my stock list. So I'm actually going to replace this in a list I call my stock list. All right? My stock list, what we'll do is we'll take my stock list, and what we're going to do here is we're going to now re-rank this. So let's go back to stocks. Let's go back to actually, we're already here. We're in earnings effects. All right, this time what I want to do is I want to take my stock list. All right, let's go to my stock list. And we're going to now look at those 6 stocks, and we'll see which ones had the best change in option premium in the last 4 earnings reports before they even occurred. This before earnings. Hit that search button and boom, and here's what we got. Take a look at this. Wells Fargo. So what's going on with Wells Fargo? Well, Wells Fargo's stock is upticked in price before its earnings, and its implied volatility, its IV, especially on the call side, ticked up double digit in price the last 4 earnings cycles. So we check the last 4 earnings cycles, and check this out. Here's the problem I have. This one reports earnings in 2 days. Have we missed a boat on this? I'm going to say perhaps we have. All right? But here's a 16-day one. Let's take a look at this one. Qualcomm. Now, the problem I have with Qualcomm is that, take a look at this, Mike. It's actually dropped in IV, so it's not really a great presentable one.
Yeah.
All right? But I will end with this. Mike and I are doing a video, and we're going to show you our picks tomorrow for what we see as the best ones to be looking at moving forward. And now you guys here that are on the live stream with us know exactly how we pick them. So what have we done here? We have not talked about stocks that we think are going to go up, stocks that we think are going to go down. All right? We don't hope stocks are going up. We don't hope stocks are going down. We didn't look at a chart and just say, hey, it's moving higher. Oh, my gosh, it's moving lower. You know, everyone's buying, everyone's selling. No, we didn't do that. That's all entertainment. We're not here to entertain you. All right? What we're here to do is teach you a rules-based strategy. Now, going to throw this out there. Is this a guarantee? No. Nothing's a guarantee. What's a guarantee? Death and taxes.
Yeah.
That's a guarantee. All right? But we don't have guarantees. We are rules-based traders. We know that we're not going to win 100% of the time. We know we're going to lose. But what we do as pattern traders is we spot rules-based patterns. We backtest those. We look to see, again, where is the best times, in this case, to get in and get out. And we showed you examples using earnings and using that scalper system that we're doing, the surges we're looking for. That's what we look at. And then number 2, what we do is from there, try to create a low-risk trade that enables us to get in and get out for the least amount of risk and the highest probability or highest potential of upside. And then number 3 is just planning, executing, and managing. And that's where you go in, you and I go in individually to our brokerage platforms, and we set our opportunities. We enter, we put our exit strategies in, and we manage those trades. All right, guys. Hey, do me a favor. If you haven't done so yet, please help us out with the channel. Hit that like button below if you like what you've heard here today. I do these every Monday at noon. And, you know, depending on the output or what you feel, you know, we're doing here, guys, you know, makes me want to do these more and more. Longer, I'll put more videos up. But again, helping us out there, it's a big help if you hit that like button. Also, if you haven't done so yet, subscribe. Hit the subscribe button and ding that bell, and you'll be the first to get our earnings video, which is going to be coming out sometime tomorrow. All right? Again, like I said, subscribe and ding the bell. As soon as that thing gets uploaded, you'll be the first to receive it before anybody else. All right? Guys, thank you all, guys and gals, for hanging out with us. Appreciate it. Again, we got video coming out tomorrow on earnings. I'll be back again on really the end of the week. I'll be back at the end of the week. I think on Friday, we'll do our end of week podcast. Other than that, have a great rest of your day. We'll see you again soon. Bye now.